Happy Friday, everybody. Woo woo. We made it through the week. Short week, right? Feels like a long week, but it's a short week. So it is June, so we're going to go over the May numbers. So again, I'm on Market Monitor, and I have a couple more things to share here, but on Market Monitor, so if we look at May, this is where we're at May 2021. So our median sales price is $348,000. So 348,000, we are up 20.8% from a year ago. So now remember when you do this, so this May 2021, the 348 up 20.8% is comparing it to May of 2020. So May of 2020, we were 288,000. May of 2021, we're 348,000 median price. So that's $60,000 in 1 year. So now look at, from a trend standpoint, look at what happened during our shutdown period. So here's March, April, May, June of last year. So when you look at all that, it was a very flat line for about 4 months. And that flat line for 4 months was sitting right about here. But remember, people started writing contracts again. Let's say middle of May, late May, June is when the contracts started coming in. So you can see what happened to July, August from that point forward. But this was the very flat period. So when we go to June, if we look at June, what do you think is going to happen in June? We're going to be about the same, right? If not higher. So, this could be 21, 22% if we compare to June of last year. But look at what happened July, August. We had a big jump July and August of last year. So you're going to see this May and June number be big, but then from July and August, it's going to start to slow down a little bit. It's not going to be a 20+% type of move. So that's just something to watch go forward, because now when you're doing year-over-year comparisons, you're comparing it to post-COVID shutdown period. Right now, we're still right in the middle of where we were kind of that shutdown period. So these numbers are going to start to decrease over time. If you look at price per square foot, so price per square foot, again, it's reflecting the same thing as a price, up 19.2%, year over year. But again, look at what happened May to June to July to August. We had a big run up right here. So again, you're going to start to see this slow down as well once we get to July. Again, June should still be significantly higher. Percent of original price. So, again, we're still stuck with Market Monitor not having corrected their issues. We are well over 100%. If I were to guess based off the trend, we're probably 101.5 to 102%, somewhere in that range. I know Sean McKay and some other people have put in requests to get this fixed, but as you can tell on here, we are still, don't take this as 100%. It's over 100%. It's just their computer program can't keep up with it. And if you go back max in time, so if I go back all the way, look, we had that same problem back here in 0405 where it was capped out at 100%. So, we're running in this, and again, I think we're going to be, let me shrink it back down to the last 3 years. We're going to be here for a little while, I think. I do think, though, that if you look at the market, some people are outpricing the market. So this will settle back down because people are running ahead of where the market is. They were kind of running behind in here for a while, and now I think we're starting to run a little bit ahead, and people are getting a little too over exuberance. What was the word that was used? So their prices are just going a little bit too quickly above the market. If we look at days on market, so again, we were at 3 last month, we're at 3 this month. Again, how fast can you put a house under contract? Is it much faster than 3? Not really. From an MLS standpoint, by the time you list it, take all your offers, accept the highest and best offer, you're probably putting it in there in 3 days. So this is about as fast as you can do it, right? So remember, when we talk about median, whether it's median price or median days on market, median days on market of 3 means half the houses are selling in 3 days or less, and half are more than 3 days. So there's still a good quantity that are 4, 5, 6 days on the market. So don't take that as a bad number. but this is meaning half of them are selling in 3 days or less. So basically, half the houses, as soon as they come on the market, they're getting a ratified contract. Now, if we go back in time again, let's look back in history. You know, back in the recessionary period back here, I mean, we're 80 to 90 days. So 3 is unbelievable. I mean, never even thought it was possible. We got down to 20 pre-recession, but we are at 3. So don't expect this to get any better. This is as good as it's going to get on days on market. And again, one point about making days on market is the market is going to adjust very quickly to your price. You know, and that's reflected right here. If you're underpriced, you're going to get above full price, right? The market is going to dictate that in the first 3 days. If you're overpriced within a week or two and you're not getting a contract, the market has dictated you're too high. You know, you don't have to wait traditionally the 80, 90 days to figure out you're overpriced. You wait a week or two and you haven't sold, the market has spoken clearly that you're priced too high. You know, and again, I have a listing that I've had for 120 days. And again, this was not my choice of price, but we listed at $314.9. And I've been hounding them about changing the price because I knew it's like, look, we're getting showings, right? It's not like we weren't getting showings, but we weren't getting offers and the feedback was not changing. So got them down painfully to $309.9. Still wasn't happening, right? I changed it on, I think Monday, maybe a week ago or so. I changed it from $309.9, and I've been telling them all along, you got to get below 3, right? 3 or below. So as soon as I changed it to 3, what happened? I had multiple offers. So here's a house on the market 120 days, but I sold it with multiple offers after I got to the right price. So what's key to remember about this days on market is it's really, and I don't like using days on market. I would rather have a statistic that says days on market from the final list price. So if you change the price of a house, it's like having a new listing. So, I mean, I sold instantly once I got to the right price. So the days on market shows 120, but the number I really care about, I sold in 1 once I got to the right price. So again, it's lessons learned. It's like if you're lasting a week or two at a price, that's the market saying you need to reduce your price if you're really going to get a contract. Sure, if you've got second showings and people thinking about it and considering an offer, then maybe you get a little more time. But if it's just you're getting occasional showings and some random feedback, then the market's saying that you're overpriced. And you'll see we have this pent-up demand of buyers. So as soon as something hits the market, you're getting this flurry of showings, but then that flurry of showings slows down pretty quickly after that flurry. And that's the market kind of unwinding itself and saying, okay, now you got to wait for somebody either coming to town, hits the market as a new buyer. You have to wait for that. So again, go through your listings. If you have listings and they've been on the market for more than a couple of weeks, start to ask yourself why. So, you know, just watch that number carefully to help guide you. Months of supply. So again, we were at 0.8 in April. We were at 0.7 in May. We're lower by almost 80%. So last May, we were at 3.3 months of inventory. We're at 0.7, right? So take 3.3. We are almost 5 times faster right now than we were last May. And last May at 3.3, what is that called? That's called a seller's market. So last May was a seller's market, and we're a good 4 to 5 times faster today than last May. So this is as good of a seller's market as you're ever going to see probably in your career. So we're at 0.7 months of inventory. If we go for homes for sale, so we dropped down to 1405, and I think this is a snapshot on May 31st. I think is how they count this number here. So we were 72% below last May. So last May we had 5,180 homes for sale. Today we have 1405. So when you look at that difference, it's down 73%. Now, we had already started, because if you want to look at the typical trend, you know, in May, you're a little bit higher. We had already started pre-COVID a downward trend on inventory. And obviously after COVID just amplified that, you know, because when did the school shut down? March of 2020. So that's kind of ballpark I use for when everything started, we were at 5,600, we're down to 1,400. Now, I do want to caution everybody that I'm willing to say here now, I have enough data, we've already passed the low. I feel very confident we passed the low, and the low was May 18th of last month. So I have a calendar on my wall that I write up the number every day between 9 and 10 o'clock. It's like, what's the count? Because I want to watch it, and I feel very confident. So if you look at this morning, we're about 1457. So 1457, I have to go back to April 16th since we've had 1,457 homes for sale. So I've got enough data. Like, I mean, that whole month of May was a bottoming process, and we're hitting the market with enough new listings. They're outpacing, the new listings are outpacing the buyer contracts at this point. Now, not dramatically, but it has been a bottoming process, and I feel like we're going to go up on this count over time. So remember, this is a May 31st count, and sure, year over year, you know, if it's May, right? If we go to June, yeah, it's going to be a lot less compared to year over year, and it's going to be a lot less for a while. But when you start looking at May of 2021 and you compare it to June of 2021, I think when we're doing this meeting next month, I think this count is going to be higher than 1405. Not much, right? But I really think it's going to be higher. So I think we are bottoming out here, and we're going to start this slow. I'm not going to say it's going to be fast. It's going to be this slow upward trend heading back up on inventory, which then will slow down your months of supply, right? So this month of supply is going to be bottoming out at the same time. There's a little bit trail because the months of supply have to do with the closings, right? And so, yeah, June is still going to be a good closing month, and sure, July is going to be a good closing month, but I think this 0.7 months in the next couple months, this is the bottoming process on this too. So this is, you know, from a seasonal basis, but also from a market cycle basis. So, you know, forgetting COVID, you know, May and June and July are typically your highest closing months, regardless of what was happening. So right now what's happening is that we are bottoming out on this process, and we're going to return at some point to more of a seasonal trend that we're used to seeing. Let's see, a question from Sean, you know, specific markets where the inventory is growing. I'd have to look down, and again, remember on this, you know, for everybody, remember, you can go down to specific areas and see what that, you know, if you work downtown, look at what's going on downtown. So you can look at specific data points and not just as a whole.
Yeah, I was just wondering if you happen to check on your own, you know.
No, I haven't gone to that level of detail yet, but I mean, maybe if we have time, I can look at a couple markets.
My concern is that it's happening further out, but I haven't been able to check regularly enough to know.
Right.
Yeah.
So
thanks.
You know, I feel like, you know, when we go through this data, yes, sales price, I think is still, the median sale price is still going to go up. Price per square foot, I think is still going up. Percent of original list price, I you know, again, unfortunately, if Market Monitor gets this straight, I feel like we're still going to be over 100% for a while, but I feel like the market's outpacing the buyers right now. So they're getting a little bit too aggressive. So that percent of original list price is going to start to come back down towards 100%. The homes for sale, again, I think next month, I wouldn't be surprised we're higher than the 1405. The lowest number I have on my calendar was May 18th, and it's 1288. So the lowest number that I actually saw in MLS was 1288. So you can see 1288 to 1405, you know, that's up 130 or so count in, you know, within a couple weeks, and we're at 1457 this morning. Now, traditionally, we're seeing a higher towards the end of the week count, and then, you know, it comes back down on Monday, Tuesday, Wednesday, but I feel like we have passed that low on inventory. So if you're dealing with buyers, it's like, well, you're in a position where the count is going to start slowly. It's going to start to increase. If you're dealing with sellers, I feel like it's kind of a, you know, if you're looking to unload in a seller's market, this is as good as it gets. Now, obviously, you have to have a place to go. Don't make yourself homeless, but that's a whole other story. Closed sales. So when we look at closed sales, we had 2,143 last month. We had 2,166 in April and 2,187 in March. So that's 2 months in a row we've actually had lower closed sales. And our only month better than those two was July of last year with 2,435. Now, July of last year, you have to keep in mind, we were pretty much shut down the second half of March completely, most of April, maybe beginning of May. So all those closings and contracts got pushed, later. So July of 2020 looked abnormally high because a lot of these were closings that were supposed to happen in here. So it all got pushed to July, but you can see we are slowing down, which in this time of year, March to April to May to June, you should be increasing your closings. June, traditionally, let's go back in time, all right? Let's go back 10 years, let's say. So if you go back 10 years here, June of 2017 was the high closing month. June of 2016, high closing month. June of 2015, high closing month. So what's the highest closing month? It's June, right? It's always June. So now last year was all out of whack because of COVID. So July ended up being the highest closing month, but we will return to a more seasonal type of an effect. And June will be the highest closing month at some point. So, March to April to May to June, let's see what happens in June. I'm not saying we can't be a high in June, but you can see, I think we are running out of houses to sell, right? So this lower closed sales is because the buyer demand's there. We just don't have enough houses to sell. Otherwise, it would be going higher. You can't have 1,400 houses for sale and be closing 2,200 a month and keep up that pace. It's impossible. So what's happening is as our inventory is eroded, our closings are going to slow down. And again, I want to reference point 2,143 historically is still an all-time high. So again, we are at a highest level we've ever been. So it's a good problem to have, but we're running out of houses to sell. Look at the new listings. We actually listed less in May than we did in April and than we did in March. Now, keep in mind, look at how many closings are happening off the market, right? Contracts off the market. So if the agent's not putting it in until we close, it's not counting it as a new listing that month. So that's another kind of data point to watch, that there's a little bit of data outside of MLS that we don't really have access to. It's like how many closings are happening that A, don't hit MLS until they're closed, or B, never hit MLS, but they're in public records. So, I mean, those are things to watch here, but look at that. So May, let's go back, May of 2020, we listed 2,417 properties. May of 2021, we listed 2,307. We actually listed less properties this past month than we did a year ago. And again, there are some dynamics with COVID in here in the shutdown. You can see that big drop in April. And there's some dynamics in here with not putting stuff in MLS. But we have to watch this trend, because if we're listing less properties over time, again, there's less for sale. To have a transaction, you've got to have a seller. And if we lose our sellers, you're losing the ability to do some transactions. Look at pending sales. Same thing. It's like March to April were pretty flat, but then we lost some in May. Now, it's really hard to tell how many are going to go active to close in MLS that are really pending right now. It just doesn't show it in MLS. So this is the one thing we're not quite sure. And if you look at a year ago in May, we had 2,250 under contract. So we're up 3%, which is a slight increase, but is it like the number of, it's not exactly, look at the closed sales, up 42%. So let's look at these two numbers. Closed sales up 42%, pending sales up 3%, right? So how can we keep up that closed sale increase every month with only having 3% more pending? We can't. I just, and again, look at May to June, a huge jump, right? So when we come Next month, this is not going to be anywhere close to 42%. So don't get fooled that we're going up at this pace forever. It's about to change because we had that huge jump in closings. In July, when we do this in August for July's number, I can almost guarantee you this is going to be a negative number here, that we actually close less properties in July of 2021 than we did in July of 2020. So again, we're in this transition period where these numbers are going to start to change pretty quickly. So again, pending sales dropping off. Now, if you look at normal seasons, let's forget 2020 for a second. Look at the normal peak on pending sales. It's generally going to be May, right? So let's go back in time a little bit. So here's May of 2019, that was the peak. May of 2018, that's pretty much the peak. May of 2017, March, so that was an early one, March of 2016, but your pending sales always peak before your closed sales by 30 to 60 days, right? It has to, right? So all the data that I took for 20 years, the peak contract date that I could tell was about May 22nd. So anything before May 22nd, you're building up the number of pending sales. Anything after that date, you're starting to slow down the number of pending sales. So we are going to start, in my mind, to feel that seasonal change on pending sales, as well as the market change from a standpoint of we just don't have enough houses to sell. So, yeah, there's a lot of dynamics outside of MLS, but just from
Anton, your sound cut out.
Hey, it's been showing his phone and now it's not. So I wonder if he's completely gone for the moment.
Yeah, I see his face, but I don't see his cell phone on the Zoom anymore. He's going to call back. Give it just a second. Yeah. Thank you, Sean. All right, you're
okay,
back, Anton?
I'm back.
There we go.
Sorry. Comes to technology, right? So, okay. So, these numbers, let's watch them the next few months, but all of this is going to change. Dollar volume. So we hit $1 billion again last month. So we've hit $1 billion. We hit $1 billion last July. We did it again in March. We did it again in April. We did it again in May. Now, so that's 4 months that we've hit $1 billion. Now look at this. So May of 2021 compared to last year, almost double the volume. Well, that's because we were in shutdown mode, right? So we didn't have that many closings in May because of the COVID shutdown. So we almost doubled. Well, watch what happens to June. We jumped to 800 million, and then July we're at $1 billion, right? So this doubling, once you go to June, July, this is going to change pretty quickly as well. So these year-over-year comparisons are going to change the dynamics of what these numbers are showing. And again, at some point, I wouldn't be surprised that this is actually a negative number on volume sometime in 2021. So we're in this real transition period of now we have a year of data, and the numbers aren't going to be as favorable. And keep in mind, the media, they're going to jump on that. Sure, the media might publish something like, look, the volume is double, of last year, but then in 2 months when it's negative, then they're going to like, what's wrong with real estate? But it still could be $1 billion. So again, take all that with a grain of salt, but watch what's going on here. Shows to pending. So on here, so the showings to pending, look at this drop from April to May. And again, I want to see a couple more months of data. But so we went from 15 shows to pending to 13. Now, yes, we are putting houses under contract very quickly. So a lot of times in under 5 days, right? If the median is 3, most of the houses are selling within a week. So when you look at this drop, that's shoving all these people in the house within a short period of time. But I think what's happening is that are we starting to outprice the buyers? And then this is a reflection of, well, instead of in April having 15 buyers that wanted to run look at a house, now there's only 13. So are we starting to eat up some of that buyer supply? Partially because we're outpricing the market. So let's watch this number the next couple months. And if it starts to come back down to 12, 11, and if we go back further in time, this is kind of more traditional as 12, 13. We kind of jumped up here. Now you also have the seasonal effect to this, that it might slow down. But if this number starts to sag too much, that shows that we're pricing too high for the market and starting to deplete some of our available buyers because of price. Shows per listing, we see that same drop here. So in April, we were almost at 13 showings per listing in a month. And then in May, we're down to 12. So a slight change, but also a change in a negative direction. So, let's see what happens over time here. Is this still going to be a downward trend? And that's all telling me the same things, is that we are starting to outpace the market on price. The sales price, 20.8%, good luck in keeping that pace up for very long, right? You're going to outprice any buyer in the market at some point, because whose incomes are going up at 20.8%? So you just have to keep in mind that that's going to change over time. And again, there's a lot of dynamics out there with the tax law changes. What are they going to do with capital gains? And again, these were the statistics, but just from where the market's at is that, all the printing of this money, at some point, they're going to collect in taxes going forward. And if they start to change that capital gains tax rate, it's going to create some dynamics where either sellers are going to hesitate to sell because they're going to think, well, I don't want to pay 40% in taxes. And if you include state and local and Medicare and all that stuff, Obamacare, it could be half your capital gains as an investor. So if you're a higher income investor, it could be that high. So if that starts to change, you're going to see some people just say, you know what, I'm just going to hold on to my property. I'm not willing to stroke a check to the government for that much money. So some people are going to just delay selling and hold on to the property, which could keep the supply down. So the number of homes for sale will be, limited because people don't want to sell it and pay the taxes. Well, you definitely have some situation in the higher end areas of Charleston where even your primary residence will be taxed on a capital gain. Remember, it's $250,000 capital gain for single, $500,000 for married if you've lived in the house 2 of the previous 5 years. So and again, there are definitely some properties around here that have exceeded that gain. So now if they change that capital gain rate, it's also going to affect those primary residence people having to pay taxes on their houses. So all these dynamics are coming at us forward. What are interest rates going to do? What's unemployment doing? I don't know if anybody read the article about, I still don't believe there's no inflation. I'm just having a hard time, and maybe a few months from now, I'll prove myself wrong. But look at anything that you're doing. Is it more expensive or less expensive than it was just a few months ago? And maybe we're so deep in the real estate world that every single contractor is so busy that they charge so much money to do anything. It just seems so expensive. But there's also an article I read about shrinkflation. So take a look at things that you buy on a normal basis for your household. And I was reading an article, like, look at cat food. And maybe they used to sell these little, bags in the 16-ounce size, and they charge the same price, but now it might be 12 ounces. So this inflation is trying to be hidden from the consumer. So what these companies are doing, instead of raising prices, because that's a flag. If your bag of cat food goes from $15 to $18, that's a flag to you. But if your size goes from 16 ounces to 12 ounces, who's paying attention? Right? Is anybody paying attention to that? No, it's the same cat food I ordered, and they just assume it's the same. They're not checking the size of the cat food. So this is happening right now. And if you're on Amazon or wherever you order from or what you're ordering, It's like, watch what's happening is they're going to shrink what they're providing to you, but at the same price. So it's a hidden inflation because you're actually getting less for what you're paying. So, there's a lot of things happening right now that we'll notice in 6 months, a year from now. And I'm not trying to raise any sort of major flags in real estate. We're good, right? But I think you look back in 6 months, a year from now, this is as good as it gets for a seller. It's like, I don't think we fast forward to next spring and the seller's like, wow, this is even a better market. Now, I'm not saying their house won't be worth more. There's two things here. I'm not saying their house might not be worth more, but I'm saying the absorption rate, the months of supply, there's no way a year from now we're at 0.7 months. I just don't see how that's possible. I think we're going to go in this upward trend. I think we're going to have more homes for sale. We're going to have less demand at some point because we've outpriced a lot of people in the market. So, it's all things. And think about what's happening right now is that everything's opening back up, right? So people are going to start to spend their money on vacations and when you're going on vacation, you're not shopping for a house, right? You're not sitting on your sofa looking through Zillow looking for houses. So as the world opens back up, then that distraction is going to be taken away from purchasing houses. So we're in that process, I think, of kind of returning to some sort of normalcy. Kids in most areas of the country will be back in school in the fall, I believe. I still can't believe some other areas of the country don't have their kids in school, but it's a whole different story. So I think at some point when things return to normal, that desire to move. So let's say you're up in, New York and the kids are not in school. Well, Charleston looks attractive for many reasons, but one of those reasons is the kids are in school, right? They can actually go to school. So when everything returns to an even playing field and when everybody's in school and everybody's, not wearing masks, high percentage of the population is vaccinated, when it returns to normal, Charleston loses some of that allure of, well, I'm going to get out of Dodge because I don't like what's happening here. Now, we're still going to get a lot of people moving here, but over time that will lessen, which is going to start to change the dynamics that we're seeing happen here today. So again, I encourage you to go through Market Monitor, look at the areas. If you get a new listing, pick the area that you got your listing, see what's going on. If it's a huge neighborhood, you might have enough data just to put the neighborhood on here. But watch what's happening is that the market will adjust. If you're at a price and the market will absorb more, it's okay to list at a price and take a higher number than that. But don't get yourself into trouble with outpacing the market and sitting and becoming a stagnant listing, because that will start to happen because it's just, people are just making up numbers on these houses. And yeah, sometimes it's working, but I think more and more what you're going to see is it's not going to work. The buyers are going to push back at some point. And if they have an alternative place to live, they're not going to pay you that price. And we're still in this feeding frenzy. I'm not saying that we're out of this loop, but watch closely because it's going to start to change. And, in my opinion, when pre-recession, the first thing, not looking at numbers, so pre-recession, the first thing I noticed is I noticed really nice houses at what I thought was a really good price sat on the market, right? So one thing to watch for without looking at numbers is if you see a really nice house and it sits, and again, without running comps, it's like, okay, well, if it's a nice house and they're not selling, they outpace the market on price. And I think we're going to start to see more and more of that coming up, is that people, when we go in that tail end of the season, because I think some of the seasonality is going to start to return. Charleston County, the last day of school for kids is June 18th. The first day of school is August 18th. We got an 8-week window of summer for the kids that traditionally people try to move with kids. So August 18th, when that comes back into play, it's going to start to return a more normal seasonal effect of moving. And as some other areas of the country, if their offices open back up and they have them in person or they limit the ability to work remote, it's going to be less, give them less ability to move where they want. So this is what's going to happen over the next year or two, is that the dynamics are going to return to more of a normal environment. So I think this is all stuff that we see. By doing this once a month, you're watching what's happening. And I'm willing to say we've bottomed out on inventory. Like I feel pretty confident about the fact that it happened last month and that going forward, it's not going to be as low as it has been. Now, it's a long trek back up. I'm not sitting here saying by the end of the year, we're going to be at 6,300. We are not. So we have a long, and if we're still selling, even if we drop down to 1,800 sales a month, you know, we still need about 6,000 listings. And I mean, we got a long road to get back up there. So, you know, we're still in a seller's market for some time, but also, you know, just watch what you're doing with your sellers and don't outpace the market. Let the market kind of dictate what their house is worth and price it. Look, if you can get down to 2 or 3 months of comps and have enough data, then only go back that far. Don't go back a year or something like that, or 6 months. If you have 2 to 3 months, do it that way. But also watch where the actives are, watch what's under contract, watch this inventory, because I mean this is the sign. So, and I want to show this one last piece for reference for everybody. Let's go back as far as we can in time on inventory. So I want to put a perspective, and I'm not saying this is going to happen, but we were at 4,100 listings in May. I think that was roughly the low. Yeah, so about 4,200, let's call it, in 2005. We went to 12,000, so almost 3 times the listings in a 2-year window, right? So we tripled our inventory in that year one. That's not going to happen here, but let's watch very closely as this trend, because you can see it started a little upward trend and then it just gained momentum and just shot back up. Now, these were builders going crazy, building every single spec possible and loose money from the lending, which is still thankfully tight. So we won't see this rise like we did here, but let's watch where it comes back, because this was more of a healthy market in here when we were sitting around 6,000 listings, that you could see the seasonality to each one. But, you know, the last couple years, we have kind of lost all of that. We have to build it back up. And it could be 2 to 3 years to get back up there. You know, I'm not sitting here saying that we're all of a sudden next summer where we need to be, but it's going to take a while to get back there. But I encourage you on your own to look at this. Join us once a month to go through these numbers, because you want to be ahead of this game and understand to be able to convey to your buyer and seller clients and your investors what is happening in this market. So I hope that was useful, everybody, and thanks for everybody joining us today. You know where I'm at if you have any questions, but we'll be doing this the first Friday of every month, and I'm anxious to see what next month looks like, because I think it's going to start to change on the year-over-year numbers as we move forward in the year. So, well, everybody have a wonderful weekend and go sell a house or two while you're out there. So let's see if there's any more comments on here. I think we're good. All right, everybody have a good day. Thank you.